So look in Bitcoin right now, trading at just under $29,000. Of course, it'll continue trading through the weekend, but we did see tech stocks bounce back. Why not crypto?
Well, and thank you very much for having me. Despite the volatility we're seeing in prices, crypto is a volatile asset, and it is a risky asset, and it's gonna be affected or impacted a little bit more than the general market. But we've seen the pullback in the stock market, we've seen the pullback in crypto as well, but we've had a number of pullbacks in crypto since its start, and it has survived each one, and it continues to be up and to the right. So I think my message is really just keep calm and carry on. Look at the long-term horizons. None of the business fundamentals have changed, and we will look at this, learn the lessons, and continue.
So, what do you think is going to be needed to turn crypto into a truly, inflation hedge? Will it ever be that?
Well, what we've seen happen over this year, I've been calling it the year of the definition. We're getting into a more mainstream, pushing into institutional audiences. You've seen Fidelity has now added Bitcoin as an option in IRA accounts. This is huge. This is not going away. And now what we're also seeing more of this year is the crypto education. I just came back from the DC blockchain conference, and what was really positive and compelling was seeing the number of members of Congress who attended the event. They were engaged. They were talking about learning more. They were engaging in person, which was great to be able to have that in person with members of industry saying, teach us more. We want to learn more about these businesses. And whether they were taking the approach of Cory Booker, who was taking the approach of my constituency needs access, and this technology will give my constituency access that they haven't had from a number of the financial intermediaries that have shut them out of the financial system. Or if you're taking the approach of a Senator Haggerty who's saying, look, this is innovative and we need to keep this business on our shores. The message between that is we need regulatory clarity, and we've got a number of folks who are really pushing towards regulatory clarity. Looking forward to seeing the Lummis-Gillibrand bill coming down the pike, and all of these are pushing that year of the definition where it needs to be,
okay,
so we can get more regulatory clarity, which is what the space needs.
Okay, so teach our audience, please, this Terra situation. How damaging is this going to be when we look back?
So I think it's going to be a pets.com, right? I mean, I don't mean to be cute. I know people, I'm sympathetic to the folks.
That's helpful. The metaphor is helpful.
I'm sympathetic to the folks who lost money in that investment. It was a risky investment. And I think what it is one of the headlines I saw spoke to me, which was, the ground shook, but the foundations are still solid with regard to the crypto ecosystem. So it had its impact, and we learn from that. We learn from what happened with this particular digital asset. And the people who made that investment also learn, okay, this is very risky. Did I do my homework? Did I put it in the correct category? It's not backed by fiat currency. There are other stable coins that are, much less risky, that are pegged and they're backed one-to-one with, real assets. Algorithmic stable coins, on the other hand, are not. It was backed by code, and it's backed by, if you're looking at something that's backed by code, then you have to kind of look one step further. Okay, what are we looking for? And if you continue to look and you can't really figure it out, one gentleman at the conference I just attended had a great line. He said, you know what? If you can't find the yield, chances are you are the yield. So I think on the go forward, we learn from this example, and for every pets.com, there are hundreds of Amazons.